Welcome back to our channel, where we dive deep into the world of finance and accounting. Today, we have an important topic to discuss: understanding balance sheets. Specifically, we'll be focusing on interpreting the non-profit statement of financial position. So, if you're ready to demystify those numbers and gain a better understanding of financial statements, you've come to the right place. Before we jump into the specifics, let's start with a quick overview. A balance sheet, also known as a statement of financial position, provides a snapshot of an organization's financial health at a particular point in time. It's called a balance sheet because it balances assets, liabilities, and net assets. In the case of nonprofits, we refer to net assets instead of equity or shareholders' equity, as you would see in a for-profit company's balance sheet. Here's a simplified version of a nonprofit balance sheet. On the left side, we have assets, which represent what the organization owns or controls. On the right side, we have liabilities, which represent the organization's debts or obligations. Finally, we have net assets, which are the residual interest in the nonprofit's assets after deducting liabilities. This section also includes any donor restrictions or designations. Now that we have a general understanding of the layout, let's break down each section of the nonprofit balance sheet and discuss what to look for when interpreting the numbers. Starting with assets, there are typically two categories: current assets and non-current assets. Current assets include cash, accounts receivable, inventory, and other assets that are expected to be converted into cash or used up within 1 year. Non-current assets, on the other hand, include long-term investments, property, plant and equipment, and other assets that are not expected to be converted into cash in the short term. Now, let's move on to liabilities. Similar to assets, liabilities are divided into current and non-current categories. Current liabilities are obligations that are expected to be settled within 1 year, such as accounts payable, accrued expenses, and short-term loans. Non-current liabilities, also known as long-term liabilities, are debts or obligations that extend beyond 1 year, like long-term loans, bonds, and leases. Finally, we reach the net assets section. This is where it gets interesting for nonprofits because it reflects the organization's financial position in terms of its mission and donor restrictions. Net assets can be categorized into 3 classes: unrestricted, temporarily restricted, and permanently restricted. Remember, when interpreting a nonprofit balance sheet, it's important to consider the context of the organization's activities, its mission, and any specific donor restrictions. Don't forget to compare the balance sheet to previous periods or industry benchmarks to identify trends and assess financial stability. I hope you found this video helpful in understanding balance sheets for nonprofits. If you have any questions or would like to see more finance-related content, please leave a comment below. And as always, don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated with our latest videos. Thanks for watching.